What is tax planning? Tax planning is a process of analyzing an organization with the aim of closing the gap between the tax incentives provided by tax laws and the elimination of organizational weaknesses which could result into tax exposures or tax disadvantages in order to create tax advantages for the person or organization. When should tax planning take place? Tax planning needs to be done proactively, meaning it should be done before the start of either the financial year or at the beginning of the year during strategy setting. Is tax planning for only big businesses? No, the answer is no. Tax planning should be done by every business as it's a cost-saving activity compared to other tax initiatives like tax support or filing returns and tax advisory. How is tax planning done? As earlier stated, tax planning is a process and it involves the following steps using Crosseye Management Solutions Limited Way model. Number 1. Define the business. Break down the business in detail using SIPOC tool. Identify the key suppliers, inputs, processes, products, customers, systems, and the people in the business. Collect the data and identify tax risks and exposures. Collect data on the above key players in the business, looking out for where each of these can be at risk. Number 3. Analyze the data collected to identify the key tax risks and their causes. Rate them and draw the effects of each of the tax risks in terms of cost, penalties, assessments, and a lot more. Number 4. Identify the legal framework working for or against the identified risks. Cross-reference with the tax laws available to identify indemnifying sections of the law for each of the identified risks. Number 5. Process review. Here, you need to review your work procedures and practices to make sure that they do not result into any tax risks. If any of the tax risks identified are as a result of the process, then a process review needs to be initiated. Number 6. Control and communicate. Management should ensure that the identified risks are controlled at all levels through SOPs, standard operating procedure, and the measures put in place to deter the tax risks are communicated across the whole organization. Why is it important to do tax planning? Number 1. It enables the organization, company, or individual to forecast their tax liability in advance. Number 2. Tax planning deters the organization from risks of unexpected tax compliance measures that can be very costly. Number 3. It enables management to understand how best to utilize the available tax initiatives. Number 4. It is the only tax consultancy activity that results into cost saving for the organization in the long run. Number 5. Organizational processes are reviewed to detect and deter waste and defects which lead to high costs of doing businesses and also affect customer satisfaction. For more information about tax planning, get in touch with us at Crosseye Management Solutions on the contacts that are running below.